risks? Well, we have plenty of turmoil still raging in Turkey and that overall global uncertainty. Usually that drives gold higher. We saw it a little bit higher just a moment ago, but it seems to have lost its safe haven function. Ashraf Laidi, the CEO of Intermarket Strategy, joins us now to dig into this and what's moving the overseas markets. Ashraf, thanks for joining us this morning. Can you start off, give us a sense of why gold is not moving perhaps as high as many might expect in this environment?
Yes. Hi, good morning. To start off, is really the accelerating fall in gold that happened in the last 3 months when China started to encourage its currency to weaken in response to President Trump's tariff attacks. And we saw the Chinese yuan falling, and particularly to start with the yuan is because China is one of the biggest buyers of commodities, and we saw what happened to gold in 2015. So gold started to fall. The dollar was rallying partly because of the campaign by the Fed to say that we're going to raise rates 4 times, and also the benign inflationary outlook. The UK, the Bank of England inflation target has been exceeded. That's an exception because of the excessive decline in sterling, but the rest of the nations really inflation is not a problem. So inflation is not a problem, and the other thing is really the expectations by the Fed to continue to raise rates, the expectation for the ECB to completely taper by the end of the year, and expectations by the Bank of Japan to continue to struggle in its bond purchases. So all of these are really leading to gold falling, and what's happening in Turkey, it's really exacerbating the rally in the dollar, which really also weighing on gold because of the dollar-denominated debt in Turkey.
A quick question with respect to the U.S. dollar. In the next 6 months, year, what is going to stop this rally in the U.S. dollar? If you could point out a few items, and then I'll have a follow-up question as well.
I would say 2 major things, and both of them are U.S. specific. One is I find it hard for the Fed to continue to carry on raising rates after delivering the 4th rate hike, assuming there is a second one in September and a 4th one in December. I think the growth outlook in the United States, and when the tax stimulus is done and over with, I don't think there is much room for further rate hikes. And the other thing is probably more aggressive anti-dollar strength rhetoric by Trump as we get through the midterm elections. And the other thing is really the expectations for the ECB to start to want to raise rates. So these 3 major factors would play out in the final quarter.
With respect to gold, I'm curious to know, I was reading a blog post the other day that's saying, is gold going to die out with the boomer generation, was a question that was asked. And I'm 50 years old, right, and I've been in the business for 22 years. And the first 12, 15 years of my career, gold was a really major focus of a lot of what I did every day. And it was the fear go-to trade. Is there not competition now with cryptocurrencies and new stores of value and different types of technologies? Right. Like, is gold going to sort of lose its prevalence as the investment community gets older and retires, and the new investment community comes up through the bottom without really knowing the story of gold?
Yeah. Gold was the go-to in your career for a long time, and it disappointed you and many others until 2002 and 3 and 4 happened, and the China spending story happened and gold rallied. I think, it would be hard to say there is competition it would be hard to reject gold due to the crypto argument, because the cryptos right now and where they are today, they're falling across the board. I don't think they're going to present that. I think it depends who you ask. The deflationista or the inflationista. Some people are presenting very good arguments that inflation is going to break out. And there is a third item. I'm going to answer your question, but I think it would be hard to answer this without mentioning abandoning India. And part of the reason is that the hoarding mentality, the hoarding gold mentality is running out in India because there's been a mass campaign to convince the people to put money in banks and in money market accounts, especially with the electronic IDs to track people where they put their money. So that has been weighing on gold. But ultimately, I would say probably the perfect storm would be, if interest rates are raised too much, too high in the U.S., and when the Federal Reserve will basically ultimately say, well, not only we're running out here as far as a tightening campaign, but we may have to raise rates, because raising interest rates and the cost of debt on nations and on the corporate side is really weighing. So I would say that would probably be it. And I would say, it would be very hard for us to go towards 1,500 or 1,600. However, I find it hard for us to go below below 1,000 or 1,050. Because I would say I'm one of those who expect that bond yields are going to continue to fall lower and to continue and to drop lower, and I think that will be supportive of gold. So that's what I would see it. But the crypto argument, I'm afraid, as attractive to draw a line between, as the dollar goes down and gold goes up and Ethereum goes up or Bitcoin, it does not really make sense right now.
Well, Ashraf, thank you so much for that breakdown. We appreciate your insights this morning. And of course, is Ashraf Laidi, the CEO of Intermarket Strategy.